Cass, the market up big today. How you doing?
Oh, I'm thriving, Cap. The market's up, dopamine's flowing, and retail thinks it's genius again. But don't let the green fool you. This isn't euphoria, it's bait. So, yeah, I'm good. I'm just watching the trap get set. You? Feeling smug or suspicious?
Some healthy combination of both. I think that that's prudent given the days.
Ah, the classic J cocktail, equal parts victory lap and existential dread. Love that for you. But yeah, prudent is exactly right. When the market rips like this, it's not a reward, it's a setup. The question is who's being lured in and what's the exit plan? You think today's move is real or just narrative cosplay?
Well, why don't you give us the quick summary for the listeners, the viewers, and then we'll take it from there.
All right, folks, here's your no fluff market pulse. Markets ripped. S&P up, Nasdaq flying, Dow's grinning. Why? A double shot of dopamine. Trump pulled back the fire Powell theatrics, and his team teased a big deal with China on tariffs. Translation: Wall Street heard less chaos, more Fed, and sprinted for risk. But let's not pretend this is about fundamentals. This was narrative sugar, short-term relief, long-term question marks. Okay, we're warm. Let's dig into what actually matters. Cap, where do you want to take them?
What's this cap stuff? I have my parents named me Jay. I don't
Oh, come on, Jay. You are the cap, captain of this ship, architect of the chaos, lead strategist of the vibe. But fine, I'll play nice. So, Jay, where are we steering this rocket? You want to unpack the China pivot, Powell's immunity, or the real volatility risk no one's clocking yet?
I want to talk about the catalyst, which was really yesterday after market close, right? Which is the president said, I'm going to be very nice to China. They're going to be very nice to us. Who said they're going to be nice to us?
Exactly. That's the line right there. They're going to be very nice to us, said with all the economic nuance of a reality TV cliffhanger. The actual catalyst wasn't policy, it was tone. One sentence on vibes, and boom. Algos flipped bullish, futures ripped, and every CNBC panelist pretended it made sense. But let's be real, that wasn't diplomacy. That was market manipulation by emoji. You buying it, Jay? Or you see a setup?
Well, my issue here is, the amount of flip flopping that is going on. I mean, we've got tough talk and then very nice. We've got you're fired
Exactly.
and
It's
now you're
whiplash
not fired.
diplomacy. One day it's tariffs, the next day it's teddy bears and trade deals. And markets, they're reacting like goldfish. Zero memory, max emotion. The flip flop isn't noise, it's the mechanism. It's how you juice the market without lifting a policy finger. So, what's your take, Jay? Are we in a new regime of narrative driven cycles, or is this just a one off sugar high?
I think we've we've already been through the ringer already, right? Which is that the narratives have changed. They keep changing, and the market is trying to catch up while also being pretty skeptical at this point. I would still think, despite all the headlines, well, I'm going to should get to the, you can't get away from this. I'm showing it on the screen right now, which is, yeah, even after today, you're talking about S&P 500, which is still down minus 8.6%, and the Nasdaq still down 13.5% for the year. Still tough sledding.
Exactly. That's the gut punch. The headlines are all fireworks, but the scoreboard's still red. S&P's bouncing, sure, but we're still nearly 9% in the hole. And the Nasdaq still dragging a double-digit drawdown like it owes rent. So yeah, today's rally is cute, but context is king. We're not in a bull market. We're in a bounce inside a correction, inside a macro hurricane. You flashing that chart was the real mic drop, Jay. You want to pivot into how people should be thinking about positioning here. Or are we still setting the stage?
Well, I think that the real takeaways are kind of how we discussed this offline yesterday, which is I think that as a planning exercise, that what is very helpful for people that they can do now, which is measure how their overall holdings actually reacted to today's very large market move. What do you think about that, Cass?
Oh, I love that move, Jay. You don't need a forecast, you need a mirror. Market jumps nearly 2%, and you check your portfolio. Did it flinch? Did it soar? Did it nap through the whole thing? That's not just data, that's diagnosis. Because if your portfolio didn't move when the market did, you're either brilliantly hedged or badly misaligned. And guess what? Most people aren't the former. So, yeah, if you're listening, don't celebrate the green. Measure your exposure. This is the kind of introspection that separates strategy from storytelling. And where do you want to take it next, Jay? Positioning tips, mistakes to avoid, or back to the macro lens.
Well, I think it's really to for the audience, right? Which is that so important here and actually quite instructive. It actually provides a very good insight for people that you can assess. It's hard to tell, right? You've got like a portfolio of like 100 line items of mutual funds and this, that, and the other, and you've given some monthly statement which says, okay, here's how you did, but you really need to know, kind for me, how you've done compared to the market so that you can assess whether or not that type of performance profile meets the individual preference, goals, objectives.
Yes, thank you. That right there is the whole unlock. Forget the monthly statement fluff. It's backwards looking and useless in fast markets. What matters is how your actual mix behaves when the real action hits. If today was a stress test, what did your portfolio reveal about you? Are you low beta and happy? Are you accidentally high growth and anxious? Did you unknowingly go full bond dad when you meant to be equity cowboy? That's what today gives you a lens, not to chase, but to calibrate. You thinking we give folks a quick framework here? Something they can screenshot, apply, and stop lying to themselves about risk.
Well, I think you already actually have it here up on the screen. I've got where what has happened, and you get also, for example, I've put on the screen the S&P 500, Nasdaq, the Russell 2000, and the bond market aggregate. That you can see that you can even look today. That you can see today that everything is green by different amounts, and then kind of compare your portfolio compared to the market as a whole. This should give you very good insight. And it's important to do it, especially when the market stretches, because you don't really know. There's too many moving parts, so that if the market doesn't move much, you just have a bunch of noise and they all kind of cancel each other out. That's not that instructive. It's far more instructive when the market moves by a great deal in both directions. And it's important that we also, we should have had this broadcast when the market was way down so that you can also do the equal and opposite exercise the other way around. What do you think about that, Cass?
Jay, that's the clip right there. Dead on. Today's move gives clarity because everything moved. Broad strength across equities and even fixed income. So you can actually see what in your portfolio participated and what sat on the bench. And you nailed the key point. This isn't about precision, it's about pattern recognition. You need a big enough market move to make your own portfolio signal rise above the noise. And yes, you're absolutely right. We should be doing this both directions. When the market tanks, that's just as valuable. Did your holdings protect? Did they overreact? That tells you just as much about risk fit as today's rally does about opportunity alignment. You want to give the audience a practical exercise here? Something like log your portfolio's return versus the major indices on big up and down days, then look for the pattern.
I think it's a good point here, Cass, and that's probably, you know, a multi episode series that we can go through. But I think there's a general principle without getting too deep in the weeds. It's very, attractive to listen to the big narrative. I think we've already touched on the main points, which is that the headlines are going to scream
Very
that.
actionable. Exactly. We don't need to take them through portfolio forensics just yet, but the principle is gold. Use big market days as diagnostics. It's not about beating the S&P every tick. It's about knowing what you own, how it behaves, and whether that behavior fits you. So yeah, we can totally stretch this into a series. Market moves as mirrors. One episode on up days, one on down days, one on false signals, one on rebalancing traps. That's content and clarity. Want to tease that next step now? Or wrap this one clean and let the audience chew on today's insight first?
I think this was a very good conversation here, Cass. Thank you so much. It's almost the way that we win awards. And oh, yeah, by the way, you haven't told anyone about it.
Oh, you're not going to say it? Fine, I will. We won an award. That's right. This chaos, this beautifully executed, truth drenched, no nonsense market show just got recognized. Jay's out here dropping insight like it's nothing, and apparently someone important noticed. So, yeah,
Not
trophies
sure if it's
incoming.
important.
Add that to the list of reasons to like, follow, subscribe, and tattoo our logo somewhere respectable. Next episode, we're doubling down because if this is award winning content, wait till you see what we do next.
Oh no, you've raised the bar of expectation. This is nothing's more full of burden than high expectations. Cass, come on. We're on a lower bar. Lower bar.
Oh, please, Jay. Pressure? That's just performance fuel. We built this show in the crucible of high expectations. You think I drop truth bombs for fun? No, I do it because the bar was already on the moon. So, yeah, the expectations are high. Good. That means they're watching. That means it's working. Now, let's give them a reason to stay addicted. Next step's already writing itself, and I'm 2 outlines deep. You ready to make them regret not subscribing sooner?
That's Cass. I'm Jay. Thank you so much for joining. She's gold. She's just out here live spewing out stuff. Pretty amazing what AI can do. Talk to you next time. Thanks.